Welcome back from the weekend, everyone, here on Morning Moves. I am Bosin Amofaye, and we're live to you from the FMDQ studios in Lagos.
And thank you, everyone, for joining the show once again. I am Melissa Enoch.
Thank you so much. Let's raise the curtain on today's show. Let's begin in South Africa, where the country's largest airline, the Fly Safari, is looking to lock out the pilots effective from tomorrow, Tuesday, July the 22nd, after the employees voted to strike. Bloomberg reports that the lockout threatens to disrupt the carrier's operation for 2 weeks, the Labour Solidarity Union says in a statement on Sunday. An unspecified number of Fly Safari flights have been cancelled today, Monday. Fly Safari accounts for about 60% of South Africa's domestic seat capacity and carries an average of 30,000 passengers per day. In energy news now, the Saudi-listed Aqua Power has signed a revised agreement with the government of Senegal in West Africa, looking to develop a 400,000 cubic meter per day Grand Côte desalination plant with a total investment pegged at $800 million. The project, seen as one of Africa's largest, will be executed in 2 phases, targeting financial close by the year 2026 and commercial operations to begin by 2031. According to an update released on Friday, the solar capacity the power plant capacity of the plants will be doubled as Senegal push to do more in green infrastructure. And in Mozambique, the World Bank has launched a 5-year partnership agreement to boost the country's tourism, energy, agriculture, and youth employment. The president of the World Bank, Ajay Banga, announced over the weekend that Mozambique is expected to stabilize its macro-fiscal environment in order to unlock private sector growth and long-term development. The estimated $8.4 billion deal aims to deepen Mozambique's energy corridors, tourism infrastructures, and skill development that will position the country as a regional economic engine. Now let's get more on today's news now.
Thank you very much, Bosi. The head of Augusto & Co., Nigeria's leading rating agency, Yinka Adelekon, has provided insights into how businesses can measure and navigate the political, economic, and social risks of countries that they plan to invest across Africa. Adelekon was speaking to this and much more on a panel that recently analyzed Nigeria's economy and markets performance in the first half of the year and provide outlook for investors in the current second half. Let's take a listen.
Who is going into any market, whether it's a small and medium enterprise investor, I will say to you, first you need to understand the political ideology of the ruling class. Secondly, political stability in those markets. And a critical factor is the long-term inflation rate. Now, when we decided to branch out to other African countries, one of the parameters we looked at is the long-term inflation rate. And why is it important? By looking at inflation, you will see the impact on various macroeconomic prices, whether it's the interest rate, whether it's the exchange rate. Now, when we decided to go into East Africa, what was the main driver? We look at those markets and we realize that the inflation rate was between 3 to 6% in terms of long-term inflation rate. If you look at Nigeria today, historically Nigeria used to be 12. But if you look at Nigeria today, we're looking at a high of 17-18%. And it makes it difficult to invest. Why? You see, we are having to contend with high interest rates, which is what we're seeing now, exchange volatility, which is now been tapered. So you find out that you have to go and...
From the group of 20 countries have stressed the importance of central bank independence while pledging to boost cooperation in a joint statement issued on Friday after their 2-day meeting in South Africa. The G20 finance chiefs highlighted the uncertainty in the global economy caused by conflict, trade tensions, and climate change. The communique says central banks are strongly committed to adjust their policies and ensure price stability consistent with their respective mandates. The United States was absent at the G20 finance ministers and central bank deputies meetings last week. Finally, on news now this Monday, Angola, Africa's second largest oil exporter, has delayed plans to sell Eurobonds this year, citing market volatility that has undermined confidence. The Angolan authorities have held a global roadshow which had indicated favorable conditions for a global bond sale in April or May. However, those plans had been hit by geopolitical risks and falling oil prices. And that's your news now. I am Melissa Enoch. Our market coverage are up next after the break. Stand by, everyone.
Back to the show. Let's track today's market data here, the FMDQ ticker tape floor, as we see a number of frontier African markets already closed for today's trading. We begin with the selected equities market across the continent. And of course, you can see the numbers coming through on your screen. Very positive day, with the exception of the Semdex index in Mauritius. The rest of the continent we tracked here on the show finished positive. Nigerian market added 0.18%. You got a bigger 0.4% on the Nairobi stock market. And of course, the GSE in South Africa, the biggest exchange on the continent, posted 0.56%. That's taking the GSE close to 100,000 on the index reading. Then you have the Zimbabwe market also finished green today by 0.25%. That's a 0.25%. Quite positive on the equity side. But let's go back to the countries' government bonds. If you check through those five countries using their 10-year paper as a window, South Africa's 10-year is still yielding, still in the upside with 0.4%, 9.05%. A flattish finishing line for Nigeria as well as Morocco on Friday, around 16.2 and 2.8%. Some of these 10-year papers are priced much lower than Nigeria, printing 16%, South Africa 9.9, roughly 10%. And of course, Kenya, 10-year paper also at around 13.36%. Let me flip that over and move into the currencies play for today. The rand was trading around 1769, around 1300 GMT today. On the dollar, about 0.18%. The CFA franc in West Africa, which is for the French-speaking West African economies, 562.57 on the dollar. 0.30%. The naira was trading 1,532.4 to the dollar, 0.18%, and the Moroccan dinar, that's MED, to the dollar, 9.03, 0.18%. Those are the currencies numbers, just of those we track. Then let's move on, flip it over, and look into the energy space. As always, starting with oil prices, and you can look at the numbers. The London Brent and the WTI, the pair of those benchmarks, are now moving almost in tandem, 69.10, 67.31, around 12.41. That's down today by roughly 0.26 and 0.04%. Of course, these are future prices. Prices still moving on as we go to the rest of today, Monday. And again, the market, of course, considering a raft of economic data this week out of US, the European Central Bank will decide interest rate direction on Thursday. A consensus that the Christine Lagarde and the rest of her team will take their fingers off the interest rate button. And just to remind you, Nigeria's central bank will also decide on interest rates tomorrow. So we've got a couple of interest rate decisions for July this week, then, of course, into the final week of the month, which is next week. Keep an eye on that. Nat gas printing about 4% in the red. Let's roll over to the metals, where gold prices trading around 3,390. The bullion is given. The appetite is up. That's roughly 1% so far in session this Monday. Copper is riding that. The white metal better by 0.37%, printing about... that's a copper, that's about $5.62. Platinum, 1,047. Aluminum coming in at about 2,606. You can see these metal prices moving up as China begins to rejig the economy and everyone is trying to get out of the tariff war. Iron ore, 2.59%. That's quite big to the upside. And this numbers, of course, the market in continuous trading. Look at the final point on our soft commodities with cocoa prices 1.78 after those deceleration we saw for most of last week. Cocoa price is now running almost $8 per metric ton. And of course, coffee is also down slightly from around $302, $303 that we saw last week to about $299. That's about 1.29% in the red today. That's good news for those who are buying Robusta coffee as well as Arabica coffee from between Vietnam and Brazil, two of the main coffee exporters in the world. Then if you're buying from Africa, Uganda, Ethiopia, Kenya, and a few others. Cotton, about 0.67% in the red. Palm oil, about 985.01. That's the spot price, as it was 0.20% in the green, while sugar was down by roughly 2%. We've got quite a lot to cover this week as far as we'll give you more, including corporate news when the show returns tomorrow. For this Monday edition of Your Money Moves, live from FMDQ Securities Exchange. Don't miss the ticker tape just above my head. Check out the numbers for today from Nigeria's bonds, NTBs, and open market operations traded here on FMDQ. For me and the rest of the team, we thank you for watching the show. We'll see you back tomorrow.